Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 3rd of February, 2016. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Fair amount of news overnight. Mainly, we're seeing that the Japanese market took a pretty strong hit. Negative 3.2% on the Nikkei. Hang Seng negative 2.3. The Shanghai, however, only lost 0.38%. The Chinese government announced new measures to support its housing market. The People's Bank of China announced new measures to support the tepid rebound in home prices. The PBOC said first-time home buyers would be allowed to make a minimum down payment of 20%, down from the previously required 25%. Second home buyers would be required to put down 30% versus 40%. This is intended to propel to support the housing market there. Japan says it could introduce more stimulus. The Japanese yen is stronger based on that news. Other than that, this morning we had ADP ADP employment change 205,000 versus 193,000 estimated. Merck reported. Merck came in at 93 cents versus 91 cents, 10.2 billion in revenue, missing its target of 10.5 billion. And that's it. Mortgage applications came out, but I don't think they have much of an effect on us. But overall, that's how things look. Oil up 2.71%, gold is flat. U.S. Treasuries, the bonds are down 0.46%. The 10-year is down 16 basis points. Eurozone Treasuries are flat. The FTSE is down slightly at 0.37%. The CAC 40, 0.28%. The FDAX at 0.37%, all slightly down. The U.S. equities up 0.6% so far, and the U.S. dollar is down 52 basis points. What does that tell us? The sentiment overall is mixed to bullish in the U.S., flat in Europe, weak in Asia. Some risk appetite. We're seeing some risk appetite in the market, but overall it's a mixed bag of stuff. So that's how things are shaping up so far this morning. As far as what we're expecting coming into the session as far as economic releases, at 8:45 Central today, 9:45 Eastern, it's 15 minutes after the Wall Street Open. U.S. Services PMI final expected at 53.7. ISM non-manufacturing coming out at 9 Central, 10 Eastern, looking for 55.1. And then we have DOE gasoline inventories expecting 2.625 million, distillate inventories negative 1.5 million, and crude oil inventories plus 3.75 million. Remember, the prior crude oil inventories was 8.383 million. 8.383 million. That's huge for 1 week inventories. 1 week change in inventories. The Federal Reserve has its beige book at 2 Eastern, 1 Central today. You'll want to pay attention to that. That could be a mover. Let's take a look at what we expected versus what we got yesterday. Just scrolling back here. Let's fix our OS. Okay, so yesterday we opened in the range. We had an open auction in range on the open. Didn't stay very long, but overall, we did have a market that was swinging up and down. This shows a two-way auction. On the retest of the prior day's range, we got the strong rotation down. This is the rotation down is our first indication of where we stand on the day. This is where I tell you to Wait for the market to tell you what it wants. A rotation this big here indicates that the market is initiative, moving away from the prior day's range and value. It's initiative versus the prior day. It's responsive versus the composite, the micro composite in the area. Not much to do here until it gets to right there. We do have a one tick test, one tick low here. So caution. We did get a pretty decent push up, but we're up against the on a first time test up against the mid here, and so that sets us up for a short. The short takes about a point of heat, a point and a half of heat before it actually starts paying out. We're expecting an extension of the IB low, and there it is. And in the market, basically, I didn't see any reason to get long the market, even though we've pushed into the 1903. If you remember, the 1903 is something I've talked about all of last week. That is the concern with the mid short here, is that the 1903 is tested and it might be done on the downside. However, the bigger and more important news is that we opened in range, we fell out of range, and then our first push is impulsive down. And so for that reason, we stick with the short side until the market starts moving back into range. So we get the range extension down. The IB still not in at this point, so it's not a true range extension. But overall, the market is telling us that it's weak. Finally, it climbs through. It gets to the opening swing low there at 1910.75, and then it looks like it is likely to pull back to the mid and start rotating to the other side to start pushing the initial balance high. It does not do that. This is a loss. It does not do that. It has a small pullback and it extends the range. And so now we have our initial balance stat broken to the downside. The initial balance stat is 97% probability that the initial balance high or low will likely be broken on the session. That is based on a 1400-day sample. So a fairly substantial sample. We continue our range extension down. Once this rotation occurs, by the way, once this occurs, then, excuse me, then just like I wrote on Twitter yesterday, when this happened, I said the extended target now is 1890. 1890 comes from, where is my daily composite chart? Hello, where are you? There we go. 1890 right here. This is the beauty of the auction market. This 1890, this was the first test from above on the microcomposite here that you see in front of you. This was the initial test down. This is a pretty serious test, and the key target or the key magnet below, as long as we stay below that 1923, as I said before, which has shifted to 24 and a quarter, 1923.50. As long as we stay below it, then 1890 is on deck. And then guess what it did yesterday? It went right down to that. It's as good as it gets when it comes to trading for it to push down. Here we go. We get to 92 and a quarter, 92, and then it pushes down, pushes down to 1890 for a point and a half bounce. Gets to 1889. Gets to 1889, so it pushes through by 4 ticks, and then we get the bounce. The bounce here is expected to 1901, the IB low. I think I mentioned that in the chat room. 1901, and so what do? We push to 1899. We don't quite make it, but 1901 becomes a key area here. You can see the confluence here. The session basically ran out of time here, but the 1901 is now the point of control, the mid of the session, VWAP, IB low, and a low volume node. I would have loved to have seen it push here before the closing range trade for a quick rotation of at least 5 to 6 points down back into this consolidation zone. But alas, it did not happen. So that's how we left things yesterday. This was the I think it was the secondary hypothesis. I don't have my notes are in the office, but it's one of the hypotheses I outlined. We did complete our test at 1890, as you can see here, 1890 in play, and things held up pretty well. Overnight, the overnight session pushed right to the point of control, to the naked point of control, left behind from last week at 1885.50 before the bounce. The overnight session was very interesting. Let's take a look at that. A pretty whippy overnight session. The profile shows no consensus on value. Uh, the market basically opens and drops right away on the Asian Open and then gets a bounce, gets a very strong bounce to 1908.75 and then drops all the way through to 1893.75 again before it rips back up on the UK. I think I forget what it was. I think it was the UK services number, and then now it's pushing to the highs. The overall high is weak on this session again. A very boxy profile, so there's no consensus here, but we're pushing up against a weak high. The market's trading 1909 versus 1909.50 on the high. I'm expecting this to extend. It looks like it'll extend before the open, but I'm expecting the market to continue pushing through on the upside. So that's how the overnight session is shaping up. The low overnight is not an incredibly good one. You could see the multiple tests there on the 15-minute. A lot of volume on the low, so not the greatest low in the world, but then again, it is acting. The S&P overnight trades based on a proxy with the other markets, with the European and Asian markets. It's not running under its own power. This morning, the primary hypothesis for this morning, there it is. It's just pushed the overnight high. The primary hypothesis is we're likely to continue to drift higher. We're likely to attempt the 1914 early on. Failure to take the 1914 and push in an initiative way out is likely to turn us over to 1905.75 and back to 1901. Initially, I expected a bounce on the first push to 1901 and then to 1905 and then a continuation lower, and then the target becomes 1885.50, but we are within that 1890 composite point of control, which is a magnet, and we're likely to get stuck down here. So the primary idea for today is a continued push higher, failure to 1905.75, 1901, and then for it to continue to push down to 1895 with an extended target of 1885.50. That's the primary. The secondary is that it gets responsive, chops around the 1905, between the 1905 and 1901. There is some risk appetite based on the metrics I gave you overnight. And then it starts to push back into the Monday trade, and then Monday has an LVN in the 1928 area, and that becomes a key target upwards. That's about 20 points away, and it's well within range given the last few sessions. So that's how things are shaping up. That would be the second hypothesis. The first hypothesis is test up and failure down into yesterday's profile to continue this movement. The point of control has shifted down. The price action is lower, lower high, lower low. The expectation is it'll likely continue to be attracted to this 1890 area. It's rare that we test an MC point of control and bounce right off of it. We do bounce, for several days. We do have an initial bounce. I'd like to trade those on the initial test from either direction, bottom or top. But generally, we get stuck in this area and start chopping around, and that's why the 1885 is in play. That's all I had for you. Good luck for you today, and I'll catch you tomorrow. Take care.